This is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the Source Capital Group 2016 Disruptive Growth and Healthcare Conference in New York City. With me right now is Jeff McGroarty from Safeguard Scientifics. The symbol is SFE. Jeff, welcome to SNNLive.
Good morning. Thank you. Thank you, Robert. Good to be here.
Great to have you. So for our audience who may not know the Safeguard Scientific story, let's get an overview of the company.
Sure. Safeguard's a company that's been around for over 60 years. We are a holding company that deploys capital in early stage healthcare and technology companies. We help to build those companies and grow them, and then we look to exit them through an exit that rewards the entrepreneurs that have founded those companies, and hopefully as well for Safeguard shareholders.
Okay, so what is the criteria for Safeguard?
We focus in the two broad sectors of technology and healthcare. Within those large sectors we focus on within healthcare, healthcare IT, also what we call med tech, so diagnostics and devices, and specialty pharma is another smaller sector for us. And then within technology, we focus on digital media, enterprise 3.0, so companies that are focused on big data and analytics targeted at large enterprises, as well as financial technology.
So, and why those sectors? You know, there's so many different places that you could, go and work in, but why those specifically?
Well, Safeguard over the years has always evolved with what we saw in the markets as being the high potential areas. So a few years ago, those sectors weren't necessarily the same that they are today. It's where we've seen the most growth. We also look for companies that are relatively nearby geographically for us. We are a very active participant in these companies' growth. So we like to target companies that are nearby that we can get to, a train or a short plane ride.
I was going to say, by nearby, you mean on East Coast?
East Coast, yeah. So most of our digital media companies are focused in New York City. We also have a lot of our healthcare companies, healthcare IT space, are in the general mid-Atlantic area. So we like to focus on companies that are sort of in our backyard.
Okay, so let's also talk about the portfolio a little bit. Historically, what have been maybe some of the winners and maybe some of the companies that are currently in the portfolios, maybe some of the highlights that are happening right now?
Sure. We've had a number of great successes over the past 7 years or so, including a company called Advanced Biohealing that was acquired by Shire, Clariant, which was acquired by GE Healthcare. The trend, as you can see, tends to be that the exit for us is an M&A opportunity, typically by a large Fortune 500 company. Those are the types of companies we're looking to build our companies that it would be easily acquired and a platform that these companies then can use to grow their businesses in other directions.
So basically, you incubate these companies? Because, I guess I should ask that in the frame of the following way, is like, when do you get in, and start, bringing them into the fold?
Sure. Typically, we're looking for companies that are revenue stage. We've got one pre-revenue company today out of the 29 partner companies that we have. So usually they're companies that are doing $1 million to $3 million in revenue. They've got at least some pilot customers. They've got a technology that's been developed that we know works, but they're looking to raise capital primarily to go into the sales and marketing function as well as continued product development. That's typically the use of proceeds for the capital that we're putting to work in these companies.
And then when you bring them into the fold, how do you participate? Do you take a board seat? How does that work?
Yeah, we always have a board seat with all of our partner companies, typically 1 out of 5 board seats or 2 out of 7, something in line with what our ownership percentage is. And we tend to acquire between 20 and 50% ownership stakes in our companies. And in addition to the board seat, we also have just the management team of Safeguard that includes the finance function that I'm responsible for, also the legal function, marketing and communications, all those folks who have a role at Safeguard as a public company. We also utilize those resources to help our partner companies. And we look to try to help them when they're early stage. We're probably a little bit more hands-on. But as they grow, we're looking to help them develop those resources in-house so that they can effectively stand on their own and be independent companies that don't need to rely on outside, on outside investors to provide those resources.
So I was going to say, going back to the industries that you tend to focus on right now, what's going on in them currently? Where do you see the various opportunities ahead?
Well, one of the big areas for us recently that we've been targeting and continues to be an area of focus is healthcare IT. The costs of healthcare continue to increase, but the dynamics are changing. We're going to get away from a pay-for-service model to a pay-for-outcomes. So we're looking at companies that help to improve the care that's provided and also reduce the cost of care that's provided to the American healthcare consumer.
And also, I've seen that the company's come out with some recent news, not just on updating financial results in the first week of March, but you also have some news from some of the companies that are currently in the portfolio, correct?
We always like to put out momentum releases. Our companies, we encourage them to do that to show the growth that they've been achieving. We've got a few companies that are really doing well that are in what we call our high traction stage, which are companies doing in excess of 20 million. And those are our more mature companies. MediaMath, which is based in New York City, is a demand-side platform, a technology company that's used by advertisers and advertising agencies for placement of real-time bidding and buying of ads programmatically, and they continue to grow. It's a great company. A lot of interest in that space. And another company on the healthcare side called Putney, which is a generic pharmaceutical company for companion animals, so generics for cats and dogs.
And what's your background, and how'd you get into Safeguard?
My background, I was a CPA with a Big Four accounting firm for about 10 years, and then I went to a company very different than Safeguard. I went to a company that was in bankruptcy and was part of that turnaround experience. We got the company out of bankruptcy after about 3 years, and I decided I didn't want to be a turnaround expert, but I did like being in companies that were really on the cusp of doing something great. I wanted to get into companies that had more upside, so that's why I was interested in Safeguard, to work with early stage companies where there's still a lot of risk, but there's a lot more upside and there's a lot more excitement and enthusiasm by the employees and the stakeholders.
Okay, so we're in 2016. We're in the middle of the first quarter. What are some of the goals and milestones going ahead for the calendar year and maybe a couple quarters ahead?
Sure. For 2016,
from what you can tell me, by the way.
Sure. Right. For 2016, we see valuations, I think, are going to come down to a more reasonable level based on what's going on in the public markets. So we think there will be buying opportunities for us, particularly as the year goes on. But we see the opportunity to exit companies. Despite what's going on in the market, I think most of the companies that are the natural acquirers for the companies that we have in our portfolio, they continue to do well. They continue to have a lot of cash on their balance sheet, and they're looking for growth. And in a lot of cases, they're looking to acquire that growth because the organic growth hasn't been there for them. So we think there's going to be plenty of opportunities for us to exit companies in 2016.
Where can our audience go and find more information about Safeguard Scientifics?
Our website, safeguard.com. We've got a great new website that was unveiled in 2015. It's got lots of information about the company, all of our partner companies, and links to each of their websites. So I would recommend that if you're interested in Safeguard, you go there.
My name is Robert Kraft, and we're coming to you live on SNNLive here at the Source Capital Group 2016 Disruptive Growth and Healthcare Conference in New York City. With me again has been Jeff McGroarty from Safeguard Scientifics. The symbol is SFE. Thank you so much for coming on to SNNLive.
Pleasure.